Market volatility came roaring back today after the S&P 500 dropped 3.1% from Friday's high down to this morning's low. Taking a look at the VIX, we closed at 1862 today, nearly up 13.5%, but at the highs of the day, we were well over 20. You can see the 20 level is the largest gamma exposure concentration, over 96 million gamma exposure. And this is a great chart because every single time we have pierced this 20 level, this shows how volatility sellers are really in control of this market. Basically, anytime the VIX is over the 20 level, volatility sellers assert control. We're looking at a 30-minute candlestick chart here, so we're talking less than a few hours in each of these circumstances where volatility is only holding above 20 for a very short time before getting slammed by vol sellers. And of course, that happened again today, ultimately closing back below the 20 level here at 1862. So even though volatility made a comeback today, the real story was that vol sellers reasserted control immediately at the open of the trading session. And where we closed on the S&P 500 is really not that bad. We're negative gamma, approximately negative 644 million, and our GEX intensity gauge shows you the relative GEX levels in terms of our historical averages. And you can see gamma exposure on the S&P 500 could be anywhere between negative 3 billion on the max negative side and positive 3 billion on the max positive side. So we're really nowhere near the maximum level of negative GEX, and this is an area where we oftentimes will see bounces back into positive gamma exposure. So tomorrow and into Wednesday is going to be really interesting from the standpoint of market structure. Coming back over here to the S&P, we closed right near the important 6,000 level, and just going back all the way to the election, you can see how important this 6,000 level has been. This was an area of resistance immediately after the big surge following election night, and we've basically been oscillating back and forth up and down around this 6,000 level over the last 3 months. And so it's no surprise that even on a big volatility spike like we had today, we're still closing near this 6,000 level. Next, let's take a look at Bitcoin, our favorite indicator to judge risk on sentiment in other asset classes like the equities markets. Bitcoin actually bounced just off of this 95,000 level earlier today and is now firmly above the 100,000 level. And for the most part, during the last 2 months, Bitcoin has been trading above 100,000. We still have large gamma exposure concentrated at the 110 and 120,000 strike. And so if this bounce can sustain, there is still the possibility to break out of this resistance zone around the 108,000 level. We're watching this level very closely because I think if a breakout does occur above the 108,000 level, this is going to be a big signal in terms of risk on sentiment across asset classes. And so I'm looking for a breakout above 108,000 to signal potential new all-time highs in the market despite the volatility. It's still too early to call a top in the markets just yet, so we're going to take advantage of these dip buying opportunities as much as we can. And in terms of our own portfolio, we do have multiple hedges in place as well as diversifiers in our portfolio, which we discuss in our community Discord. If you want to see all the option strategies that we're buying and selling in our option portfolio, I'll put a link down in the description below so you can check out our community Discord. You definitely don't want to miss that. And so this move today on Bitcoin was quite significant from basically from the lows to the highs. This was approximately an 8 or 9% move. Next, let's take a look at Palantir. Palantir kind of got lost in the shuffle today with all the other market news, but actually reported earnings and we're trading above 100, if you can believe it. Almost a 25% move in after hours, coming right into this 100 strike. If you look at the options volume today, highlighted by these blue bars, you can see there was volume coming in, strong volume coming in at the 100 strike, over 40,000 contracts. And this is basically at every major strike between 80 and 100, there was huge volume coming in. So speculators were still very bullish on Palantir heading into this earnings release. The GEX data was also very bullish. Obviously, the 100 strike is the largest gamma exposure concentration, and I do believe we will get some selling pressure after things shake out above 100 for Palantir. Next, let's take a look at PayPal. We haven't talked about PayPal in a while, but it looks to be in a consolidation pattern between 85 and 90. Strong move up today here on increased volatility. gamma exposure looks skewed positive with strong positive gamma exposure at the 90, 95, and the 100 strikes, and pretty decent volume coming in even at this 100 strike as well. I think if we can get a breakout above this zone, particularly around this 93 to 94 level here, we can get above this level, PayPal actually looks good for a move into the 100 strike. And when we look at our 3D surface model, you can see the majority of the gamma exposure at the 100 strike is in this March 21st expiration. So this could take some time to play out. This is approximately 6 to 7 weeks until this March 21st expiration at the 100 strike. So this is something we may be looking at slightly longer position for us in our portfolio, but we'll probably be looking at a potential position in PayPal from a longer term perspective because the gamma exposure and the volume continues to look good at these higher strikes. Next, let's take a look at silver. We'll look at SLV, the silver ETF, trading at 28.73, coming off of this double bottom back in the end of December and finally starting to gain some momentum to the upside near the 29 strike. You can see gamma exposure has really been coming in at the 29 and 30 strike. We've been watching this now for a number of weeks. We see pretty sizable volume today in the options market at the 30 strike, and I think the road to 30 for SLV looks pretty good over the next couple of weeks. Metals in general have been doing pretty well. We're actually trading both SLV and GLD in our options portfolio, and it looks to me like the gamma effects are really starting to kick in here, which are basically going to act as a magnet from the options market, especially when we're talking about, size like 60 to 80,000 contracts being traded each day at the 30 strike. If that continues, there's going to be a lot of potential for the move into the 30 level here over the coming weeks. And as a reminder, if you want to check out what we're doing in our options portfolio, you can take a look at our community Discord. It's absolutely free to check out. I'll put a link in the description below. We've got a ton of great traders in there sharing their own personal strategies and trade ideas. And we also post all the moves we're making in our own portfolio as well. So you definitely don't want to miss that. Again, link in the description below. Also, be sure to take advantage of our winter special, $300 off our yearly portfolio manager tier subscription. Use code WINTER2025 at checkout. We do have a few spots remaining, so take advantage of that while you can. You'll get access to our gamma exposure dashboard and our option flow analytics tools. It's a really great addition to your trading arsenal. Anyways, thanks so much everybody for watching, and we'll see you guys in the next video.